So warm welcome to all of you from Consultants Consortium of Chennai and Management Systems Consultants Consortium. As you are aware, November is the month of quality celebrated across the globe. And as usual, we have rolled out our annual series starting from 5th of November, covering various topics for wide range of sectors um, in the areas of standards, certifications, regulations, covering both manufacturing and the services sectors. This is actually today is the last day in the series. Totally, we have completed 16 series, 16 topics throughout the month. 50% of the sessions are related to manufacturing and rest of the sessions are related to services sector. And this year we have created more conversations and services with a clear objective that many conversations are actually missing in the services sector, especially in the emerging sectors. A lot many emerging sectors that are coming up in the services, but then no conversations are happening. And we just wanted to address that. And it is one of the reasons why we have created more conversations in services. Most of the sessions were related to quality, safety, security, and sustainability standards. And today morning, we had a session on use of AI and machine learning in uh, uh, in quality and also in customer services space. So the session was a good one. We had two speakers who brought a different perspective from a manufacturing, how AI is being used for business efficiencies, and how the hospitality sector, hotel industry is actually embracing AI and machine learning for better guest experiences. Like this, all the topics touch upon. There are industrial standards on quality and safety and security, and there are compliances and regulations and a lot of sustainability focus across the globe. So this is the reason why more sessions on services. We had close to about 7 or 8 sessions designed for services sector, which are received well. And as usual, our audience during the daytime, they may find it challenging, a little tough to attend all the sessions. So that is the reason why all our session recordings, when uploaded in the YouTube channel of the association, are being visited and viewed by the regular participants, regular attendees who have been attending for the last 5 years. This is the 5th year for CCC. And those of you who have been attending, participating in the sessions regularly, you might have seen our journey slowly, gradually. We are also evolving. And our consultant, this is a forum of consultants where we come from the domain called management systems, and all our conversations are actually related to this. And so today's session, we have our session host, Mr. Suhas Agavane, who's from our consultants forum, who's management system consultant for information technology, cybersecurity, data privacy, and various other international standards. So we once the sessions are completed, as you're aware, all the recordings will be uploaded in our YouTube channel on the same day or the very next day. And towards today's session is over, in 2 to 3 weeks' time, all the 16 sessions, the key takeaways from each speaker, the key highlights, everything we are going to compile it into a digital newsletter, news bulletin, kind of covering the complete series. And we will be releasing it to the marketplace, to the participants from various sectors. All these conversations are actually attended by industry, various stakeholders, participation from industry, from consultants, from compliance teams, and those are connected to regulations, those are connected to certifications and assurance side of it. All of them are watching and participating in all these conversations. So with this, I would like to thank you all once again for joining us today. Today's session, the program objective outline, and why this conversation is created, everything will be explained to you by the session host. Welcome, Suhas Agavaneji, and over to you, please.
Thank you, madam, and thanks the CCC and the Management System Consultants Consortium for giving this opportunity to host this important session. So first, let me welcome the first speaker, Mr. Subramaniam, who will be having the first slot uh, to be delivered by him. So let me first put some initial thoughts on this. If you see a couple of decades back, the compliance means only three, four different aspects were there. One is the typical ROC compliances. Depending upon nature, then there are certain environmental related or the labor related compliances and staff welfare related compliances, and to some extent local bodies regulations and the permissions. But over last 2 decades, more than 2 decades, the scenario has been changing because apart from these compliances, there are a lot of service and the product related compliances that are be getting imposed by the nationally also, internationally also, and every sector is now almost getting regulated by such compliances, which are in addition to our normal compliances. So it is very important to meet those compliances on regular basis, because meeting the compliances you may not able to gain additional business advantage, but that is a kind of a prerequisite for any business, because if you don't have the compliances, the repercussions of not having that compliances in terms of the your organization reputation, as well as the in some compliances there will be a lot of penalties, financial penalties will be there, and in quite a few sectors these are also happening prerequisite for the getting certain kind of a business from the certain kind of client. So with this contest, the topic which we are taken up for today's last tale of this month-end long webinar series is regarding the compliances. So I will just uh, share the our sessions outline, and then I will introduce the speaker.
I just wanted to add one line here, Suhasji.
Yeah,
As the global theme this year is actually to move the businesses from a compliance to a performance based initiative. So much of focus is also there in the global world for compliances. So the theme is actually how to bring that transition from a compliance focus to a performance focus inside the businesses. So the conversations are also built around that, and the topics are also designed accordingly. I just wanted to share this. That's all.
yeah.
Thank you.
Thank you, thank you. So our topic for this session is the adherence to the industry standard and the compliance requirement, which is a non-negotiable. And with this topic, we are trying to sector one of the most regulated sector in this domain, that is the BFSI sector. So in the BFSI, understanding the quality assurance in the BFSI sector, that is the focus area. Now, somebody might think, what is the compliance relationship with the quality assurance? Now, if you see the one of the fundamental definition of the quality is the meeting the requirements. So when we talk about the meeting the requirements, the requirement of all the stakeholders. So one of the stakeholder for meeting the requirement will be the all the regulatory and the statutory authorities or the industry authorities who are giving their requirement in terms of the compliances. So unless we meet those requirements, we can't say that we are delivering the quality product or we are delivering the quality service. So that is the perspective that I want to put forward before we go into the details of understanding the quality assurance in the BFSI sector. So with this topic and the focus area, our first session is on the evaluation of the global capability center in India. So this is comparatively new domain area where there is lot of uh, lack of knowledge is there. Rather, there are lot of misconceptions are also there with respect to the GCC. So it is right opportunity for us to get tuned to this concept and to get some insight on this. So what are the changes that is happening with the expectation, and what is the ground reality over the years, and where it is going to head? So for this, we have the our renowned speaker Subramaniam.
And Carvi earlier, it's now called KFinTech. And I have led multiple operational teams across as it has been put on the profile. So I thought it's probably time for me to chart my own course after a long stint in the industry. And that's how I was talking to Rama the other day and said I plan to start this. So she's been kind enough to include me in this forum. So I'm very happy to join this forum today. And what I'm going to be talking about is the global capability centers, GCCs as we call it, how they've evolved in India, and what were the expectations when these started, and what's the reality now, and how the landscape has really changed. I'll also touch upon the regulatory landscape impacting the GCCs a bit. And time permitting, I'll also talk a little bit about the performance culture in the GCCs, which is aligned to, I guess, the quality, overall quality goals that we're talking about. So talking about the GCC evolution in India, so basically these have become an integral part of the multinational companies' global operating models. So over the last few decades, India has emerged as a leading hub for the GCCs, mainly thanks to its talented workforce, the cost advantages India has to offer, and all the technology capabilities that we bring in. So if we go back to the early 90s and 2000s, when these earlier they were called offshoring centers or whatever, I think the GCCs as a name has been coined very recently. When in the 90s, when the liberalization of the Indian economy started and the doors were open for foreign investments, that's when some of these global companies started to establish captive centers in India. And initially, the cost was obviously on cost arbitrage, offering back office services and IT support, reducing operational costs for the firm, and started with very basic execution type of work, which were essentially following the instructions kind of model, right? And key drivers were low labor cost, improving infrastructure, and skilled English speaking professionals, which India has in abundance that we can offer. And the companies were mainly focusing on IT services, customer support, and transactional kind of processes. General Electric, American Express, these were some of the companies that moved first in that direction. And just to give you a perspective, right? So the model was for every one person that was working onshore, two people were hired in India, because that was the deficit, or I would say that was the confidence building that was needed to be, because they felt that people will take time to absorb, and they were still making money. So from there, I think we have traveled a long way. And cut to now, if you look at global corporate centers in India, they have really have transformed from being mere cost-saving hubs to strategic value creators for their parent organizations. So they now serve as engines of innovation, digital transformation, and global operations excellence. Uh, Please feel free to stop me if there's any question. Otherwise, I'll keep going, right? So some of the key features of today's global corporate centers, if you look at it. So one is the focus on innovation. GCCs are no longer limited to transactional or back office operations. In fact, they're driving core research and development, product development, digital innovation across industries. And some of the examples which Rama alluded to earlier also about artificial intelligence, machine learning algorithm, cloud solutions for global markets. And many global firms such as Microsoft, Google, and Samsung rely on their GCCs to innovate products tailored for global and regional markets. So that has been the change from where we started and where we are now. Today, one of the other features is high-end analytics and data science. GCCs are now leading advanced data analytics, helping their parent companies with decision making, predictive modeling, and customer insights. And these centers are also handling complex areas such as fraud detection, personalized marketing and supply chain automation. Digital transformation and technology enablement is another area where GCCs are thriving on. End-to-end ownership. Unlike in the past, GCCs have full ownership of the key projects, including strategy, execution, and delivery. They've also become centers of excellence for areas like finance, HR, supply chain, and legal services. And these were things that were unheard of in the past. It was just transactional. So because seeing the success of how these GCCs have made, I think even areas like finance and HR have also started utilizing the GCCs. And focus on talent and skill development. India's GCCs have also become talent hubs for diverse skill sets from engineering to technology to design and customer experience. And the parent companies are also willing to invest in employees here for them to learn these technologies and ensure that they are able to implement them in the processes. The collaborative ecosystem is also very friendly. They work with startups, academic institutions, and innovative hubs, right? And ESG, as we all know, is the in thing now. And the GCCs are taking a very proactive role in driving sustainability initiatives such as carbon footprints, leveraging green technologies, and so on. So in terms of impact the GCCs have been creating on India, one is the economic contributions. They significantly have added to India's GDP. And today, if you look at it, over 1.5 million professionals are employed directly by the GCCs. And the global perception also has changed. India is now recognized as a global innovation hub rather than just a few cost outsourcing, rather than just as a low cost outsourcing destination. And the presence of GCCs has also led to a reskilling revolution, ensuring a workforce is prepared for future demands. So in summary, when it comes to this, the evolution of GCCs, this reflects a broader shift in the global business dynamics, and these centers are no longer just operational extensions, but are also an integral part of the strategic growth of the multinational organizations. And with the emphasis on innovation and technology and high-end value creation, the India's GCCs continue to basically redefine global processes. So I'll take a pause here. If there are any questions people have, then I can otherwise.
I will ask them to post their questions in the chat box, Q&A box, sir. And maybe once this thing is there, we will see. Once they understand the complete conversation, they will do it. Yeah, please. You continue.
Okay. Okay. So that's basically the evolution. So if I have to talk about the regulatory landscape affecting the GCCs in India, and as we know, like any other sector, GCCs are no exception to the regulatory landscape. And the regulatory environment in India basically has been playing a very crucial role in shaping up the strategies and operation of the GCCs. And there are a few things which I thought I'll call out, especially on the regulatory landscape. So one is the data protection and privacy. As we all know, the GCCs handle a lot of sensitive customer and financial data, and therefore must ensure robust compliance mechanisms. And there is increased investment in cybersecurity and data governance frameworks. And since GCCs mainly cater to the international clients, they're also expected to comply with global standards. So as an example, the GDPR in the European Union, and there is also the UCITS, AFMD regulations in the Europe, right? So these are some of the regulations that bind on the GCCs, and they are expected to comply with this and also put in processes in place which ensure adherence to these compliance requirements. The transfer pricing regulation is another important regulatory requirement. GCCs, since they operate as captive units of the multinational companies, require adherence to India's transfer pricing laws under the Income Tax Act 1961. And these regulations ensure that the intercompany pricing for services or intellectual property is aligned to the market rates. And I can give you some examples as to how seriously and how diligently this is done, because these people come every couple of years to companies and then do an audit, try to understand the process in detail. So I have personally been part of some of these conversations where we explain to them, okay, this is the process that we do. So from that, they gauge whether the markup that is applied to the price is adequate or not. So there is so much of close monitoring that is done by the tax authorities to determine the markup rate, because this has a direct impact on the taxation and the amount of taxes the companies pay. The taxation framework, the corporate tax, and obviously GCCs benefit from the India's competitive tax regime with reduced corporate reduced corporate rates for the new manufacturing and technology entities, and the goods and services tax, which has become operational a few years back. So that's another important regulatory uh, aspect that GCCs need to follow. Then the fourth one is around the employment laws and compliance. GCCs must ensure compliance with the labor laws, especially with their large workforce across IT and non-IT functions. And another important aspect regarding employment is the workplace diversity. Uh, GCCs are expected to follow laws promoting diversity, things like maternity leave, prevention of sexual harassment, influence workplace policies, and HR practices. In fact, companies like JP Morgan are now making it mandatory for leaders to have at least one woman leader in their table. In their leadership, in the respect at across level up to the executive director level. So, and if any exception is made, they have to seek approval and only then hire a male candidate, if you will. So that's the way in which this is being strictly followed. Foreign Exchange Management Act, FEMA, as we all know, governs cross-border transactions, including payments, repatriation of profits and foreign investments. So GCCs will need to comply with this for smooth functioning of the parent-subsidiary financial relationships. IP rights, again, India's improved IPR framework protects payments, trademarks, and copyrights. And companies must ensure proper filings and registrations for innovations created in their Indian operations. ESG, we spoke about, that's an important regulation as well. Special economic zones and initiatives, and many of the GCCs, since they're located in SCZs, they're benefiting from tax exemptions, streamlined custom processes, and infrastructure support. And this obviously calls for a lot of compliance and documentation attached to this, right? Lastly, policy advocacy and industry collaborations, and there are forums like NASSCOM, ASSOCHAM that actively engage with the government to address GCC-specific regulatory challenges and ensure there is a smoother coordination between the GCCs and the government. And to basically conclude this topic on the regulatory landscape, it presents both challenges and opportunities for GCCs, and adapting to these regulations, particularly in areas like data protection, taxation, and compliance, is very, very important and critical for maintaining operational efficiency and fostering long-term growth. So that's essentially about the regulatory landscape. I will also, given that we have a few minutes, so maybe I'll talk about the key aspects relating to performance culture. So the performance culture is something which is in GCCs especially, and I've been part of this for many years, is something which is very, very, very closely monitored. There are very specific norms. There is a very structured mechanism in which the performance is monitored of employees. So the first one obviously is about achieving targets across metrics, whether it is revenue growth, whether it's customer acquisition, profitability, asset quality, and employees are held accountable for measurable outcomes. So promoting, as we call it, the smart framework, which was earlier, so now various versions of that have come. And promoting a results-based environment is something which companies focus on. There's always a customer-centric approach, a strong performance on improving customer experience and satisfactions, And performance evaluation often include metrics like retention rates, employee retention rates, net promoter score, grievance resolution. And these are things which are tracked, and there are metrics in place which tie to employee performance and most of it. So there is very little scope for an employee to say that I've done, I mean, especially when the metrics say otherwise, to say that, okay, I've done well, why is my rating not good and stuff like that? Because everything is tied to numbers and it's all system driven. Data driven decision making, increased reliance on analysis and technology to track performance and identify opportunities, usage of dashboards and KPIs to measure individual and team contributions. Compliant and risk management is another key area where employees' performance is tracked. And this is very, very important because adherence to regulatory compliance and effective risk management is a very important consideration for an employee's appraisal process. And they are evaluated on their ability to align with ethical standards and minimize risk exposure. Collaboration and teamwork is also an important consideration given the complexity of financial products. Fostering collaboration between departments, operations, technology is key. Partnership with the stakeholders onshore is also considered, and there is a specific weightage given to that. Performance appraisals increasingly recognize team contributions alongside individual achievements. Innovation and agility is another important aspect. Employees are encouraged to adopt innovative solutions to cater to the demands of digital banking and fintech advancements. And agility in adapting to changing market conditions is also a very valued trait. Recognition and rewards. Performance culture emphasizes timely recognition and rewards, including bonuses, promotions, and non-monetary incentives for top performers. And just like any other industry, high performance are often fast-tracked for leadership roles. The companies also invest a lot of time and money in learning and development to upskill their staff on digital transformation, regulatory changes, and emerging trends. With all this said, there is also equal emphasis on work-life balances. While high performance is rewarded, long working hours and high-pressure environments can sometimes lead to employee burnout, as we all know, and the organizations are rightly beginning to integrate wellness programs to support employee well-being. So that's essentially on the performance culture. And just to conclude, in financial services, the financial services in India lay a lot of emphasis on performance culture, and this is often characterized by a mix of aggressive target orientation, customer focus, and obviously adherence to compliance. So that's essentially what I wanted to cover in this session. Happy to take any questions.
Any questions in the Q&A box? I have just jotted down a few questions myself.
Sure, Rama.
I just wanted to check, you're talking about performance management systems. Do you have any such framework in place, performance management systems framework that is being used, whether developed in-house or third-party frameworks, or any other voluntary framework or mandated framework? Actually, do you have any such frameworks in place?
Yeah, there are frameworks. So it is all, I mean, this process has also evolved over the years, Rama. So it used to be like a number-driven rating system, right? It used to be like on a scale of 1 to 5, people used to get 3, 4, 5, and stuff like that. So where 3 is like meeting expectations and 4 is like exceeding expectations. So from there, it has changed to more like across different parameters like client relationships, team building, leadership, and business results. You are given a strong, or you are either called on track, or basically there is opportunity to improve, which is called a growth. So this is how people are rated, and again, it depends from it kind of varies from organization to organization. There is no something. I mean, there's not something which is very standard across, and each organization has its way. But the whole framework is very, very, I would say, robust in the sense that there is a budget that is allocated and leaders have full authority to decide how much they would like to reward and how they would like to reward their employees. And this is something which is again based on the ratings. And depending on how people are rated, they get their incentives, they get their raises and stuff like that. So it's a very structured approach. It is something which is, as I said, it's not same for any organization. It varies from organization to organization. But essentially, from what I have seen over the years, this has really improved a lot. I mean, this has evolved, and today it is more. It has moved from being a very objective-driven performance mechanism to a more subjective-driven of um, performance appraisal. So.
You're talking about having women leadership in workplace. So
Yeah.
is it related to that global DEI strategy
Yeah.
globally, a part of this thing? So because there's a lot of kind of uproar or resistance on DEI in markets like US itself. So organizations, most of the GCCs have origin from global markets, especially US. So is DEI really taken seriously in the GCC world?
It is, in fact, in the last 7, 8 years, especially, there is a lot of emphasis on diversity, equity, and inclusion. Right? Earlier, it used to be called only diversity and inclusion, but now with other aspects of diversity like pride and veterans and all of these are also part of that. So it's now called diversity, equity, and inclusion. So there is a lot of emphasis on that. And as I said, I was giving you an example of how in JP Morgan, at every leadership table, there has to be a woman represent. I mean, I would say there has to be a woman leader. So sometimes positions are kept on hold for months together till they find the right person. So even if it means there are a lot of eligible candidates in the male fraternity, until they get a woman leader, the position is not filled. So that's how seriously this whole thing is taken.
On the fintech innovations, you were mentioning that as GCCs focus so much on the fintech innovations. Are these innovations driven internally or are they collaborating with external world of innovators? Maybe collaborations or joint ventures or in the form of acquisitions, because is that synergy happening between the GCCs and the external innovation hubs? There are plenty of innovation hubs from academic settings or even standalone innovators are also there. Is that co-working collaboration happening?
I would say it's a mix of both. So while there are big companies like JP Morgan, obviously have a huge technology setup, and they have all the resources to kind of cater to the demands and needs of the operational processes. But equally, there are a lot of other companies which tap onto external sources for driving their technology enhancements and innovations, right? So again, even I'm not saying it's something which is a strict no for companies like, so even JP Morgan, for instance, AI is a new development. So while they are trying to get people with that kind of skill, until such time they are still looking at external, and there are vendors who are tapped into for bringing them into reality. So
And on the financial products side, I wanted to understand, see, when it is a captive GCC, you cater to your parent organization, maybe it's your captive the GCC station positioned outside the country, and you cater all your financial products to your parent organization, so you know which compliances you have to meet. But there are certain GCCs
mhm,
which cater to many such global companies as the captive unit. They don't, it is not a captive one. Basically, they work with multiple companies and act as their R&D hub or a product development hub. So country to country,
mhm,
this fintech, your financial products compliances regulations differ. Do they
right.
create that kind of an in-house regulatory cells, legal cells, compliance cells to meet the needs of the various importing countries?
Yeah, so there are people who have hired, so there are compliance functions within each company, some depending on like if it is a direct interaction with the end customer, then obviously a lot of that intelligence has to be built in. So obviously those kind of people are hired and there are adequately staffed to ensure that they meet with all those demands. But for other companies, again, I keep going back to JP Morgan and Franklin Templeton as an example, because we are just an extended arm of the offices there. So the client interaction is largely done by them outside. Whereas we basically, for us, the clients is the people sitting in JP Morgan, Boston, or Franklin Templeton, um, New York, or whatever, right? So that's the way it functions. But again, if it's a direct interaction with the end customer, then all the intelligence, all the know-how and all is developed here, and there are teams that are specifically hired for that purpose.
On talking about the business achievements, businesses generally say we have received so and so certifications, we are compliant to this international standard, that international standard. So what kind of certifications, what kind of whether it is maybe which is something to do with security, quality, uh, do GCCs actually make an attempt to implement all those industry standards, international standards, or just leave it only to the regulatory mandates? I want to understand.
No, there is a lot of recognition for such certifications. So there are international certifications that people in India actually take because they aspire to work in those locations at some point in time. So it is not just to one is of course learning the function, getting to know more about the industry, but equally there's also a desire for people to work on, and that's another thing which I did not actually include in my update. There are enough and more examples of people who have worked here for a number of years. They look for the right role outside of India and went there and they are doing well. And there are numerous examples of people who have actually moved from here after doing those certifications, after being subject matter experts and gaining that knowledge and being able to go and work in the onshore location. So
these are the people certifications, enterprise certifications.
I'm not talking about people certification.
Oh,
I'm talking about
oh,
industry certifications like
okay.
NCFM or even like in my earlier role where there was a certification with regard to depository operations. So there are
Okay.
people who took those certifications because they wanted to understand more about the function and how it all operates there. So they did that and then they were able to move. So
It's something to do with the skill certifications also,
yeah,
functional roles. Okay, this
correct,
is what
correct.
these are all the doubts I have, and there is a forecast that all this GCCs where they're been there in the country, as you rightly said, they were called offshore development centers or data centers earlier. But now again, many have kind of, they had closed this many years ago, but many have stayed back in India also. Lot of IT-based
Yep.
companies, their GCCs at some point, they have actually closed down. But then the wave that we are seeing, especially after COVID, there is a lot of momentum in the country in the GCC space. And what we are seeing is earlier, the focus used to be much more on the services, predominantly from IT sector. Now we are seeing this GCCs in the manufacturing product development also. We are seeing the GCCs in healthcare also. And
Yep.
medical technologies, all these things are emerging sectors. Maybe in the financial services, banking space and all, certain benchmarks are laid. But this all this emerging domains that we are talking about, healthcare, GCCs, and various sectors, we really do not know whether any kind of because there are no such previous cases. Very few are there in the country. I'm just trying to figure out when they are all setting up in the country. Newly, lot of hand holding, support, and all those is there. If it's a parent company, their own captive GCC, they will extend all the assistance. But there are some
Mhm.
GCCs, they are seeing typical product development in healthcare products. We are seeing that they are doing their R&D is open for any player. Anybody can take care of their services and things like that. And those are all very new domains. So I don't know whether there are any structured frameworks for GCC's operations functions that are developed. NASSCOM is one body for the country, whether any such structures, frameworks are developed, because we really do not know how many domains will attract this GCCs. If you see the number of GCCs and sector agnostic, if you see sector focus, multiple sectors, we are seeing GCCs in engineering, we are seeing that in aerospace, we are seeing that in defense, but they're all new to the country. So I really do not know whether somebody to help them with their defined systems, processes, structures, where any such forum is there for GCCs to offer this kind of a hand holding. Any idea?
So, industry, so as you rightly said, NASSCOM is one thing which is all encompassing across groups and industries. But I'm sure there are, for specific industries, they have their own little groups that are there, that they kind of channelize all their thoughts and ideas into fruition, right? So I'm sure there are, I mean, I personally may not be aware of a specific thing, but I'm sure NASSCOM is something which is driving the whole thing together.
Anything much happening in the insurance? Because we are seeing a lot of GCCs in the financial services for many years. Banking also, yes, we do have it. But in the insurance, I really do not know whether we have any such GCCs. We have some BPOs, ITS companies, but any GCCs happening in that domain? Any idea?
Yeah, United Healthcare is one which does a lot of work on that space.
Okay.
And there are a few other companies which, I mean, I don't remember the names, but yeah, there are a few people as well who I think the Max, there are one company in Bangalore, I don't recall the name, but they are into the insurance offshoring space.
Lot of FTAs the country is signing also globally. It is including a lot of services from the emerging sectors now. This is
Right.
where various modes are there. So movement of people and export of services is also being positioned. So in addition to India, any other country across the globe is very strong in this GCC space. Any idea? Because we are
Yeah,
huh?
very much. So Philippines is one location where JP Morgan itself has a big presence, like 10,000 people are employed there.
Oh,
Apart from that, in Europe, in Poland, there are a couple of centers. Warsaw is one place where they do a lot of this
okay.
offshoring work. Then there is Poznań is another location within Poland. Yeah.
Oh, so many countries are competing in the GCC
Yeah.
space, is it? But still,
Yeah.
we are attracting a
But
lot of traffic.
I mean, in terms of cost advantage, I think India still has a lot to offer. Especially one in terms of the cost arbitrage and also the English speaking skills. I think we are better placed. I won't say the others are not good, but I think India is better placed in that aspect. So I can give you the Poland example, especially the Poznan people. While they write mails, they converse between them. Of course, with folks in the US and India, they write in English. But within their own thing, they still write mails in the Polish language. So so India is better placed in terms of communication that way. So
got all my questions answered. All these
Yeah,
questions I used to
Subramanian,
wonder and things. Yeah,
I
please.
have one question. Maybe
sure.
somehow it is related to it. This is if you see last 4 5 years, there is
Right.
an informal GCC that is happening through the freelancing and individuals taking up the lot of jobs, right from the coding and the software development, even technical architect, even in our consultancy domain also, and even some case in the product design also. How this is going to get affected because of the formal regulations and the compliances that are going to hit them at some or other time? Because right now I don't know whether the individuals who take up the assignment as a freelance as a work, whether they are really aware about such repercussions or the drawbacks in getting something wrong in that part. How you
So
see?
I would say I mean, I think the the companies which are offshoring or getting these work done should also do adequate due diligence firstly before they even move this work to specific individuals. I don't know if that's an informal kind of arrangement, but I would not think that companies in the US or companies outside of India, especially in the European region, would do anything which can get them in the wrong side of the compliance. I'm sure they would have done their due diligence, or they would have done their required I mean, I would say clearances. They would have got the required clearances to do this. Otherwise, they wouldn't want to be on the wrong side of the law. One thing is for sure on that. But individuals, these may be more like, I mean, what they are bringing to the table in terms of the skill sets. So on a one-to-one basis, probably, I think they are still able to do that without necessarily having to go through all these regulatory aspects and being part of an organization and stuff like that. So that's my take on that. I think it's probably something which the organizations have taken a considered view, and they are able to go ahead with these kind of arrangements.
Especially, I'm asking with respect to the FEMA, and in case of some data breaches happen, something happens, the person who is taking up such job will hit a lot. Not the organization who is offshoring that work to him, because they might be taken due diligence and all paper terms and conditions properly done, but the individuals might not be aware about such things. So
Yeah.
any such broad guidelines are available for such individuals to?
I honestly, I'm not aware of anything that has specifically been designed for such arrangements or such work contracts that people take up. But I think, to your point, it's probably a matter of time before these things come up, and I think the government will definitely come up with a regulation around this or a framework around this for individuals to take up specific jobs or contracts from companies outside India.
Thank you.
Thank you.
So any questions from audience? I'm not able to see the.
No one has posted any questions.
Yeah. So thank you, Mr. Subramanianji. It's nice interaction and quite a lot insightful that you are given into the GCC, and we look forward more sessions from you. So thanks once again. And
sure.
So over to our next session. I'll just check up. Yeah.
He's there. Vedavale has joined.
Yeah.
Okay. Thank you, everyone. It was great being part of this session, and thanks, Rama, for bringing me into this. Yeah. Thank you so much. Okay.
Thank you.
Bye,
Thank
bye,
you, sir.
Bye.
Thank you, sir. Thank you.
So our next speaker is on the rising litigations in the BFSI sector due to the non-compliance with the regulatory requirement. It's legal perspective. Mr. Yash Vedwal, he is the speaker for this topic. I welcome Mr. Vedwal. Hope I'm pronouncing your surname correctly.
Yes, sir. Yes, sir.
Yeah.
Vedavale.
Yeah. Welcome in this webinar. So, Mr. S. Vedwal is an advocate enrolled in 2019 with the Bar Council in Tamil Nadu and Pondicherry, and practicing before the Madras High Court, Civil Courts, NCLT in Chennai and NGT Chennai. His specialization lies in the corporate, banking, IT, telecommunication, media, and the environmental law. He has a depth of experience in drafting appearance and arguments before various courts and tribunals for his firm. He has successfully represented the various MNCs and the individual clients, securing the multiple favorable orders from the courts. known for his powerful force in the workplace with a positive attitude and tireless energy. That is what he is with here. So encourages the others to work hard, succeeds, and driving the team with the success with the through the leadership and the motivation. So his topic for today's discussion is the rising the litigations in the PFSI sector due to the non-compliance with the regulatory requirement. What is his legal perspective? Over to Mr. Bedwal.
Thank you so much for the kind introduction, sir. Yeah. So today on the, am I audible, sir?
Yeah, you are.
Audible and visible. Yes, sir. Yeah. So today on this, for this topic, I would this is becoming a more and more important area for banking and financial services industry around the world. So this is because there are there's a huge increase in the number of lawsuits because of companies not following regulatory requirements. So in this topic, I'd like to focus mainly on three major areas where there are major litigations involved with the BFSI sector. The three areas that I would like to cover are the cybersecurity issues and the consequential financial fraud that's taking place, the strict regulatory compliances that have to be brought in place, and the third would be the requirement for a strong governance structure. And in each of these areas, what I would be going in depth is our four subtopics. The first being the key causes of litigation. The second are examples around the world where India can take inspiration from the laws, and then I would be going into the laws that are there prevalent in India in tackling these three specific areas. And the fourth would be obviously the recommendations that are required for mitigating these issues. So the first area that I would like to speak about is the cybersecurity issues and the financial frauds that are rampant across the globe right now. Now here, we all know the BFSI sector is the prime target for the cyber criminals because of the sheer volume of the sensitive financial data that the industry itself handles. There is a huge surge in data breaches, ransomware attacks on multiple BFSI sector, BFSI industry industries. There are phishing schemes that are going across to the customers of banks and financial institutions, and unauthorized access incidents have also increased across even though there is an equivalently prevalent heightening regulatory scrutiny. So what are the key causes of litigation when it comes to cybersecurity issues and the subsequent financial fraud that takes place? The first is the weak encryption standards that multiple companies adopt. With evolving times requires evolving encryption standards. So failure to secure data using advanced encryption can expose institutions to lawsuits and penalties. The best example would be the British Airways incident that took place, where the compromise of sensitive customer data was available on the darknet. And then the second most important area where litigation arises is the delayed breach notifications. So the regulatory frameworks in multiple countries, they impose strict timelines for breach reporting. But however, this is one specific area where the Indian law is lagging behind, and this is probably some place where the banks and financial institutions themselves can step up to ensure that the customer data and the breaches that take place are immediately reported to the customer, so that the customers can take protective measures on their accounts and information. Then the most all the encryption standards and breach notifications all are on the technological side, but the most important issue that is there in the BFSI sector is the human error that often creeps in. Breaches occur due to negligence by employees and increase of phishing attacks on the customers due to their own negligence. So these human errors can be avoided by having continuous regular training to the employees. So like I stated earlier, in European Union, the British Airways was fined around $20 million for for a breach that compromised sensitive customer data. This and in the United States, Capital One, a financial institution, again suffered a breach which affected around 100 million customers, and multiple lawsuits and penalties were imposed under the GLBA Act of the United States. That is the Graham-Leach-Bliley Act. And in Australia, Optus, another company, faced lawsuits under the Notifiable Data Breaches Scheme after a major data leak. All these situations, all these acts, even though they are there to protect the customers, the consequential penalty that is being imposed is only monetary. There is no recovery scheme of the customer. What happens after the data is breached? None of these legislations speak on that area. And when it comes to the Indian perspective, we all have the Information Technology Act as well as the CERT guidelines that provide a baseline. But however, as we all know, like the other laws that are prevalent in India, the enforcement of these guidelines were provided both under the Information Technology Act as well as by CERT are not being followed by multiple institutions. I'm not by institutions. I am not restricting myself to the banking or the financial sector, but any in the entity that is there that is prevalent in the cyberspace, the guidelines are not being followed. Right now we are in 2023. The central government has brought in the Digital Personal Data Protection Act, which aims to address the gaps that are left by the Information Technology Act as well as by the CERT guidelines. And the Personal Data Protection Act, as we call it in short, provides for penalties for non-compliance of having minimum standards. So now we realize that none of the countries across the globe have a proper scheme where the customer data is recovered after the breach has taken place. So what are some mitigatory methods that can be followed for cybersecurity issues when it comes to financial frauds? The first is to provide regular penetration testing, for example, regular penetration testing and mandatory breach notifications within a very short period of time. Say 24 to 48 or 72 hours can be the time period where the breach has to be notified to the customers, because as we all know, after a particular point of time, there is no return of, there's no way to recover the data that has been lost to the hackers or the breaches. Then incorporating artificial intelligence is one method that can be followed for fraud detection, and using the capabilities of artificial intelligence, we can proactively identify the threats that are faced by the institutions to protect them, and the institutions can take steps to protect themselves. And to mitigate for the institutions, for them to mitigate themselves from human errors, regular employee training can be done to train staff on phishing detection or to secure data. Human link is often considered to be the weakest link in protecting ourselves from cyber threats. So there is, apart from constant training, there is no other better method to protect the institutions and their data from cybersecurity threats. And the one more possible method can be stress testing and simulating cyber attacks using ethical hackers to prepare for real world scenarios. Many of the institutions that I know of often undertake these simulation tests, but there are ways in which this can be made better. So then the second area that we directly come across after identifying the issues is the regulatory compliances that has to be brought in place. So the financial sector is I see it as a labyrinth of already regulated by labyrinth of regulations to prevent illicit activities. But however, there are certain requirements that are there to increase the stability and to protect the end consumers. So these methods can be put in place to by bringing in steeper penalties, for example, or create certain stringent norms to regulate for the industry to regulate themselves. So what are the key causes of litigation when it comes to regulatory compliances? The first is the lapses in the anti-money laundering measures. There are multiple laws in place to protect for the institutions to implement monitoring systems against money laundering. But however, many low level non-banking financial corporations or many entities from the small players in the banking industry themselves do not often follow the schemes that are brought in place by the central government and to put in place the anti-money laundering measures. So this leads to a lot of financial crimes that take place in the country, and ignorance and inadequate implementation of regulatory updates is also one of the major concerns that I find personally in the banking and financial sector. And the third is the transfer of financial data. Where do these institutions store the financial data? Right now we have international players in the banking and financial sector industry in India, and we also have local players. The local players often use the local storage mechanisms, but however, there are multiple international players in the credit card industry or the personal loan industry who often take the data from the shores of India and store it in their local storage. For example, the US is a place where the data is being stored. The European Union is a place where the data is being stored. So the transfer of data, during the transfer of data, there is a high chance of the data being breached. And so therefore, there can be a mandatory local storage norms for financial data that could be brought in, and non-adherence to it can be penalized on these companies, and probably the companies can be asked to not operate within the shores of India to ensure that data localization is being brought in place, and so that the data breach is severely severely stopped. For the best examples of data breaches, as since all of us are from the industry, we all know that the Goldman Sachs had to settle for $2.9 billion lawsuit after a data breach scandal. Then in Australia, Australia is another example where Westpac was fined 1.3 billion Australian dollars for under the APRA, that is the Australian Prudential Regulation Authority norms, for allowing data breach to take place because the data was not locally stored and is in fact stored in another continent. In Africa, for example, surprisingly, also has stringent data localization laws in place. The Nigeria, for example, has the Financial Reporting Council, who penalizes organizations for failing to meet transparency disclosure standards, as well as storing data outside the boundaries of Nigeria. In India, when we take the legislations that are in place, we have the Banking Regulation Act as well as SEBI, who take care of the enforcement mechanisms. These enforcement mechanisms, however, personally, I feel are not robust as those of what we find with the United States or the European Union. The Prevention of Money Laundering Act is a deterrent, for example, but however, SEBI or the Banking Regulation Act does not have a common correlation to work along with the PMLA Act. So the deterrent that is being brought in place by the PMLA is not being implemented effectively by the government entities. But however, in contrast, when we compare to the APRA of Australia, all the compliance laws go hand in hand, and they are dependent on each other for implementation. So therefore, we get a robust mechanism to deter entities from violating the compliance standards. And we also have the entities which breach these norms. They find themselves in a soup, rather than when you compare to the Indian standards, where the entire regulatory mechanism itself is fragmented. So, like we covered, what are the recommended mitigation policies that can be followed is centralized regulatory oversight. So India being a single entity can adopt framework like the European Union, which governs cross-border transaction compliances, which govern data localization policies, provide you discharge the duties of for having penalties and fines to such a centralized regulatory authority, which can prove to be a deterrent for intentional non-compliance. Using technological solutions and artificial intelligence is one possible method. So then the third area where we go after the requirement of strict regulatory compliances is the other arm of the government, where we require strong governance structure. A robust governance framework is essential and fundamental for all regulatory compliances. Governance failures can result in systematic risk and open a huge floodgate of litigations. So, as lack of accountability is 1%, inadequate internal controls of entities is one, poor risk management of by the corporate entities themselves is one area of litigation. Here, when we talk about regulations of an entire sector, we are essentially looking at an internal regulation as well as an external regulation. The external regulation, the laws are being put in place by the central government, and the internal regulation has to be done by the industry themselves, which has been already covered. And some essential examples of where the government has bringing in controls is the SEBI's listing obligations and disclosure requirements. This is, I personally feel, is well aligned with global standards. But however, as other laws that we have pointed out, the enforcement lags behind the framework that we see in the United States or the European Union. The United States, for example, has the Sarbanes-Oxley Act, which provides, which requires entities to have strong internal controls, and the European Union's Corporate Sustainability Reporting Directive, or the CSRD, mandates governance structures for compliances and ensures transparent reporting by the entities to the customers as well as the European Union itself. Kenya is another great example that we can look at, where the Capital Markets Authority enforces mandatory governance audits and emphasizes accountability and transparency, to both, again, to the consumers as well as to the government by itself. And how do we provide a strong governance structure is to increase executive accountability, where senior executives of the entities are personally liable for governance lapses, in mandating annual audits where which can reduce systematic risk. Kenya is a flag bearer in such an annual audit, where all entities have to report to the government about the compliance and governance audit that are being conducted by by them, and it has to be reported, or there is a high penalty clause that is being established into the legislation by itself. This can probably be brought into India and integrate risk management and by developing robust frameworks to identify and mitigate risks proactively. This has there is a saying goes, the technology is first, the law follows. But however, there is an urgent need for the industry as well as for the community as such, where we bring in the law to be one step ahead of the technology. But and otherwise, there's a huge issue with the compliance standard, a huge issue in navigating the complex regulatory landscape, which can lead to catastrophic consequences. India can draw examples from multiple countries. Like I pointed out, the United States has a robust mechanism in multiple areas. Australia has a robust mechanism. Many African countries are flag bearers of compliance standards to protect. These are places where India can take inspiration from to enhance enforcement and to foster a culture of compliance. So all these, when all these are regulated, the litigation risks that the sector exposes itself to will considerably reduce. Is how I would like to close my statement. Any questions?
I have just noted down a couple of questions myself. Wait a minute.
Yes, ma'am.
Before audience, anybody posts in the this chat box.
Yes, ma'am.
You were repeatedly saying about human errors being the reason for repeated breaches, phishing
Yes.
attacks, and all
Yes.
this.
Mm.
You have highlighted this on a couple of occasions. That's a very interesting perspective because as consumers, as community, we are all always thinking that, you know, these are all the technology related and human intervention is very less actually.
Yes.
How much the employees are involved in a phishing attack or this kind of security breaches when it is driven externally. There are external factors driving all these agendas. Can we say that it is the human errors of the employees who are working inside the institution alone are responsible, or they are more I mean, they are the reason for these attacks? I wanted your views.
No, I wouldn't call it they're the sole reason of the attack. They are one of the reasons of the attacks. I know of a particular, not disclosing any names, I know of a particular entity whose master password for all their accounts is password. Yeah. So something like this. Yeah. This is what I would call a human error.
Right.
Yeah.
I understand. Now it's clear. And because
Yes,
personally feel that it's also an organizational responsibility,
yes,
is what we think. And I just liked the statement, technology first, law next is the mandate, which is not correct. It should be the law first, followed by a technology, you said.
Yes.
I fully resonate with this because RBI has come out with a guideline about 6 months ago in the month of February 2024, mandating all the banking and financial institutions, NBFCs and all of them, to have complete automation of their compliance requirements, that they have to go digital, they need to introduce technologies. This is a mandate given, and the cutoff timeline is over from by October. So from 1st of November, all banks and financial institutions have to use mandatory technologies, and it has to be 100% automation. So what happens? You bring in external technologies, third-party technologies.
Yes.
This is what I was wondering. The technology comes first, and then who is checking what technologies are coming into the system? See, it can be your internal technology. They said RBI guidelines say that we don't care whether it is your internal technology that you're going to develop or you're going to use third-party solution. Yeah. But who is going to verify the third-party solutions and the technologies here? It is going to be another case of technology coming first, and then again breaches happening, and then the law comes next.
Yes, unfortunately, yes, but unfortunately, throughout history, that is how law has ever been. Technology comes first, law comes next. It's how law has ever been throughout human history. We for any criminal act to take place, we wouldn't. There isn't any example where the law has come first and then the act has been committed. Every legislation that deals with criminal problems are often a reply to the incident also already having taken place. And to just to bring into the perspective as to what the connection with the RBI and what the entities are doing is, they are taking up the open source software released by these artificial intelligence companies, and they are incorporating it as a layer of skin on top of their already existing framework. And then they are showing as if there's a compliance, but the maximum that these AI entities are able to go forth and do certain entities is to reply to basic questions. That is essentially a page that can essentially be filled under the frequently asked questions page. Yeah. So this is the maximum that Indian entities, or rather multiple global entities even, have taken steps to incorporate artificial intelligence and automation into their it's just as a shadow. They have implemented these guidelines of RBI.
How strong is our data localization laws? Because with increasing FDIs into the country, this is becoming of late a friction point where the government is mandating that the FDI companies should store their data for all the transactions done in the country in the Indian soil. But then the global companies say that certain things have got to be migrated back to their home country. So how strong we are, because a lot of FDI sector across various sectors, lot of breaches happening.
We do have data localization laws, but I wouldn't call them robust.
Right.
They are there to suffice to give a meager protection for the consumers. The most barest of bare protections for the consumers. You to take into example, the central government had asked multiple US based entities to have data localized data storages. The retaliation by these US based companies was to remove the requirement of having the data localization. So everything will have to be done on a case to case basis. For example, to give a personal example, Apple has its cloud storage called iCloud, which has had a recurring payment system that we can connect your UPI to. The central government brought in a mechanism where you, if they were to use the UPI's UPI's API, they had to have the data locally stored in India. The reply given by Apple was to remove recurrent payment schemes from their iCloud payment system. So every month, all the consumers will have to make payments on a fixed date, for which the Apple sends reminders to. So this has been the reply. This has been the stance taken by Apple, Amex, Google, and other major US entities. Facebook also is an example. All these entities have just removed the requirement of establishing something in India as a reply to the requirements. They have made it everything on a per payment basis.
So it is really surprising to see the recent attack of Star Health Insurance data from the country, which is being sold in the dark web outside the country, right? So that is why we really do not know what checks what the balance is. But it's interesting to see markets like Kenya seem to be having such good practices, frameworks, practices, and enforcement also happening. It's very interesting.
Yes. Yeah. In fact, multiple in India can take inspiration on different areas from multiple African countries. Kenya, Nigeria also, for example, has data localization. You don't see Nigerian data being exported to the United States, even by corporations like Apple and Amex.
Very nice. Very nice.
Yes.
Good. Very insightful session. That's all from my side. Suhasji, you wanted to ask something?
I have one question.
Please.
Yes, sir.
There is a talk going on DPDP since last more than a year. We are expecting the rules based on the DPDP Act, so that the rules can be complied by the organization to demonstrate the minimum level of the compliance.
Yes.
But till the Act is already out in 2023.
Yes.
But till the rules are not out, it is more than 1.25 years. So till that time, what kind of a broad guideline that should be followed by the organization to ensure the minimum compliance?
So I think in India, as far as the banking and financial sector is concerned, the RBI's master directive already has provided a baseline for that everybody has to follow. This baseline, as far as I know, is being followed by almost all entities, from the small fishes to the largest fishes. Every entity is is following the minimum standard provided by RBI's circulars. But beyond that, is any entity taking steps? It's on a case by case basis. I see major banks have taken additional steps to ensure that data protection is being brought in place. For example, I have many major banks ask you to change your password once in every 3 months or 4 months, which itself is one of the data protection one step closer to data protection. Having to constantly change all your passwords, even though it becomes a huge burden on the consumers, where we have to keep remembering what was the last password that we had used. But this is a very good step towards data protection, and as well as protecting their own person, pushing the incentives on the consumers to be on their toes to protect their own data as well. This all such small steps provides for a huge reduction in the on the reliance on the consumers on the entities themselves to bring in more robust mechanisms. Like we say in common parlance, small pieces take it up to a larger scale, right? So that is how I think all entities should take it forward. Make small changes, incremental changes to their data protection mechanisms until there is a proper robust scheme that is being brought in place by the delegated legislation under the Data Protection Act.
Now that's there because most of the banking and insurance, or maybe some of the financial advisory sector, they are being indirectly getting those guidelines through the regulatory, either SEBI's or the RBI's or the
Yes.
certain or their own client.
Yes.
But what happens now? A lot of such questions are coming up from the non-regulatory sector. That means even if it is a manufacturing company, they are also having a lot of privacy data of their own employees. They are asking us, okay, now the DPDP Act is there. Tell us what are the rules that needs to be followed. And in DPDP, there is a clear mention that if you are doing the due diligence, minimum due diligence, then your penalty can be considered to be very less.
Yes.
So that is where the catch is. Till that time, what from the litigation point of view, what can be considered as a minimum due diligence for the non-manufacturing sectors where they are having such privacy data?
Minimum due diligence is to ensure that the data, minimum due diligence can be the best minimum due diligence is the encryption of any data that we have. Any encrypted data is safe data. Because once we encrypt, it becomes garbage to any third party who does not have the appropriate key to ungarble the garbage to make it make sense. So basic, I think a 256-bit encryption itself is a sufficient mechanism where these manufacturing sectors or any industry which handles private information or important sensitive information can use, as well as providing proper training for their employees to ensure that this encrypted data is not available at an easy manner, in an easy manner. Following proper password storage mechanisms, following encryption, and such having one-time passwords to every time that the consumer wants to access their data, and intimating every time the consumer's data is being accessed by the entity themselves to the consumer. Say, for example, if I'm the entity who's having private sensitive data, and I am processing something in the back end, if the entity intimates to the consumer that I am your data is being accessed in such and such manner, that will provide a sense of ease to the consumer that, okay, this is what my data is being used for. So such mechanisms can be followed until the rules come in place. But the best method would be is the encryption of any and every data that is available with them.
Then the last question, among your legal fraternity, what is the tentative timeline that you see that these rules, DPDP rules, will be out?
I am completely clueless as to, because that is a completely different area of governance. Like we say, there are three. Our country stands on three legs. One is the legislature, one is the executive, and the other is the judiciary. Each entity is separated by its own powers. Now the legislature has completed its task. The judiciary is waiting to know what its task is, and the executive has to implement these rules to bring so that the judiciary will know what the task is, and the legislature can bring in a more robust method, better, if required, better amendments to the act in itself. So we are all waiting on the executive to do its function, and as we all know, it does take some time for these things to go through. And it's better that it takes time, so that the at the end of the day, when the rules come in place, we all know that the minimum standard is the best standard, rather than having something half-baked come out first, and thereafter all of us having to constantly rework the same thing again and again.
Yeah, that's true. Thank you.
Thank you.
So
We have the
I don't
next
think that
speaker.
any
No,
questions are there.
Sorry. No questions in the
No
chat
question.
box.
Yeah. So
Next speaker is there. Chandana is there. She logged in from Vedavale's handle only. Maybe you can
okay.
rename your handle, Chandana. Yeah.
It's a little difficult to do
Right,
the renaming.
fair
It'll
enough.
take a couple of minutes. I don't want to
Fair enough.
waste anybody's
No,
time.
Right.
no
Right.
So, hi, good afternoon.
Yeah.
just give me some time. I'll just introduce you and your topic.
No problem.
Okay. Just give me.
ഇത് ആംഗിൾ തെറ്റില്ല.
Pretty വെക്കണോ ഇതിന്?
I'll just share my screen. Let me first thank Vedwal for his quite insightful and lot of examples and the practical cases that has been explained in his topic. So thanks a lot, and we'll look forward more sessions on this domain area. Now it's time to go to the next session. Our next session speaker is Sri Hari Chandana. Hope my screen is visible.
Yes.
Yeah. So she is an advocate enrolled with the Bar Council, practicing before the Madras High Court and the various other courts. Specialization is in the end-to-end case management for the small business, providing the comprehensive legal support across the diverse sectors. And his additional expertise comes into the intellectual properties, real estate, and tax matter, with the strong focus on helping the small enterprise navigate the legal challenges. Trusted advisor to the entrepreneurs and the organization, delivering the tailored legal strategies to protect the asset and promote the sustainable growth. That is something that I see as a unique offer from the legal fraternity to the industry. Solution-driven approach, committed to the empowering the businesses with the practical legal solutions for the long-term success. She has a proven success in securing favorable orders from the Trademark Registry, MSME Forum, the commercial and district courts, GST offices, and the tribunals. So over to Chandana ji for you. Thank you.
Thank you, sir. Thank you for the introduction. I hope I'm audible.
Yeah.
Yes.
Okay. So basically, we had Vedavel cover a few aspects with regard to BFSIs and what the way forward for them is. I will also maintain a similar structure herein, but I will be dealing with three other areas that BFSIs can look at reducing their legal risks and litigation costs and all of that. And I've actually taken this into three different areas. So one of the area would be strengthening the customer due diligence. So this would be one of the most important things that a banking or a financial institution should do to ensure that they don't end up in some litigation or some in the toughs with the law. So that would be the first thing. The next thing would be monitoring the regulatory updates. Now what happens, and how India can go about in adopting best practices from other jurisdictions in bringing out the regulatory updates and all of that. And also the last would be developing a culture of compliance. Now, these are the three ways that I think that banking and financial institutions can reduce their litigation, and also come about with better ways of handling it, so that they don't end up in a difficult situation. So first, let us look at the first area, which is strengthening the customer due diligence. Now, why is this customer due diligence important? Now, in preventing money laundering or fraud, or even ensuring that you don't fund terrorism, it is very, very important to understand your customers. It is very important to ensure that your customer due diligence is done right. Now, what happens if you have a weak customer due diligence? You expose yourself to significant regulatory and legal risks, including hefty fines and reputational damage. Now, what are the key elements of customer due diligence? Firstly, it is your KYC, basically verifying the identity and ensuring that your customers are legitimate. And the next point in that would be enhanced due diligence. Now, what is enhanced due diligence? For high-risk customers, such as politically exposed persons, you ensure that there is an enhanced level of due diligence that you undertake, so that you, as an institution, do not end up in problems. And the next thing would be continuous monitoring. How do you ensure continuous monitoring? You are trying to identify the red flags and transactions over time. Now, there are jurisdictions which there are, I want to bring in some global examples as to good customer due diligence practices. In the United States, you have the Bank Secrecy Act. Now, the BSA requires enhanced due diligence for high-risk customers and mandates filing suspicious activity reports, called as SARs. Now, what does that do? You constantly report suspicious activities, and in case you do not do so, in the instance of JP Morgan Chase, it was fined $2 billion for failing to flag questionable transactions related to the Bernie Madoff's Ponzi scheme. Now, in the European Union, you have the fifth anti-money laundering directive. This directive basically says that you need to ensure that there is declaration as to who the actual beneficial owner is. So basically, what we are trying to do is you try to understand who the actual beneficial owner in this is. So you're doing the due diligence, so there is no question as to who becomes the ultimate beneficiary. And in case you do not identify the ultimate beneficiaries in the EU, there are sanctions that you have to face. Now, in the case of South Africa, there is the Financial Intelligence Center Act. So under this FICA Act, institutions must perform customer due diligence for all financial transactions. And if they do not comply with the same, there are penalties for such non-compliance. Now, let us compare India with these customer due diligence norm. In India, there is the master directions on KYC. Although they are comprehensive, the actual implementation or the enforcement clarity is very, very weak. And in India, although there is a mention of beneficial ownership verification, there is no emphasis or there are no penalties as seen in the EU. What are my recommendations when it comes to ensuring, you mitigate your risks by doing customer due diligence? Now, you have basically you try to leverage AI driven KYC. So you use AI tools, because AI tools can identify anomalies and flag risks. And this is already being done in the EU. It would be great if India also adopts this method. And then to also mandate beneficial ownership verifications, just like in the EU or US practices. This ensures a lot of transparency in corporate account structures. And the last would be continuous customer monitoring. So you implement automated systems to track the patterns of your customers and to detect any suspicious activity right at the start. Now, moving on to monitoring regulatory updates. Now, one of the biggest challenge for the BFSI industry is that it is very heavily regulated. And if you do not follow the evolving norms, you will obviously end up violating a lot of the norms which are being set. But the biggest problem, again, that these BFSI industries you face is that they have to constantly keep tracking these frequent changes in all jurisdictions also. And in India, especially, some of the common challenges that the BFSIs face is one, that it is a fragmented source of updates. And then there is also a delay in disseminating changes. And then the manual processes which are involved, obviously, when there is human involvement, is prone to oversight. Now, now bringing across some global examples, we will first look at the United States. So institutions in the United States rely upon this thing called the Reg Tech, which basically offers them solutions to stay updated on various regulations. These tools automate compliance tracking completely and flag the inconsistencies in real time. Now, taking the European Union into consideration, the EBA, the European Banking Authority, it provides a centralized interactive dashboard through which regulatory updates and clarity is given on various matters. This is what the European Union does. And Australia has the APRA circulars. Basically, the BFSI institutions, they receive regular updates through centralized platforms. Basically, it helps them achieve real-time compliance. And in Africa, you have the Nigeria Central Bank Compliance Framework. The framework integrates workshops and centralized updates to educate entities on new regulations. Now, let us compare this with India. So in India, you have the regulators such as SEBI, RBI, and IRDAI. They all frequently issue circulars, but unfortunately, these are fragmented. You have to rely on your institution manually going through each one of it and monitoring it. And there is an increased risk of oversight in such a scenario, unlike in the other jurisdictions where there have been attempts made to automate such compliance with these regulations. So my recommendation would be first to develop a centralized platform, basically take inspiration from the EU's EBA, and create a digital dashboard which is interactive and which brings about all of the regulations brought about in India. Then to also encourage the adoption of Red Tech as they have done in the US. So basically, we try to use AI and machine learning language to automate compliance, tracking and ensuring that there is real-time adherence to regulatory changes. And also another important tool which you can update to stay updated with what is happening would be to conduct regular seminars and workshops. So various regulators such as RBI and SEBI can organize periodic compliance seminars similar to that of the Nigeria's central bank initiatives. Now, barring these two, what is another important thing that BFSIs can do to reduce their litigation risk? That would be to develop a whole culture of compliance, because compliance is not just a set of rules. It becomes a mindset after a point. If an organization or an institution ensures that they put compliance first, a lot of problems in the later on stages can be avoided because you are moving forward with the intention of reducing your risks. Now, what are the key components of such a compliance culture? Firstly, there is accountability at every step. Every single employee must understand what their role is in ensuring compliance. And then the next aspect would be the training and awareness, to regularly train all the executives and the employees to ensure that they all understand what a regulatory landscape is, what is involved, and how do they comply. And then the next step would be to incentivize whistleblowing. Basically, when there are violations, that the employees or everybody in the BFSI sector would come forward to whistleblow what is happening and to ensure that there is compliance. Now, looking at compliance as a culture, we will look at certain acts in different jurisdictions. One would be the United States, which has the Dodd-Frank Act. So what the act does is it incentivizes whistleblowers. It offers financial rewards and protection in case somebody makes public certain violations. Because of this Dodd-Frank Act, there were a lot of disclosures, saving institutions from ending up in bigger violations and then having to face penalties. In the European Union, you have the GDPR, which mandates annual compliance training for employees, ensuring all of the staff understand data protection norms. in Australia, you have the ASIC's corporate governance principle. The Australian Securities and Investment Commission, it emphasizes ethical training as part of its governance framework. And in South Africa, you have the King 4 Code. This government code focuses on building ethical leadership and embedding compliance into organizational DNA. So now, when you look at India, for instance, now let us look at how the whistleblowers are treated. The protections under the Companies Act 2013, it is very limited in scope, and enforcement also is not as great when you compare it to the US. And compliance training, while it is encouraged, there is no mandatory mandate, that brings in this compliance training, and it is just a recommendation, right? Therefore, it does not have that sort of effect that it has in the other jurisdictions. Now, what would I recommend, especially in trying to bring about compliance as a culture in India? Firstly, we need to protect the whistleblowers. We need to expand the protections that are already offered to these whistleblowers. And then another thing that we can do, taking inspiration from the other jurisdictions, is to mandate annual compliance training. So therefore, you know that everybody who is part of the system understands the importance and how effective it is in reducing these risks. When you train them, they have a much wider understanding of the cause and effect. And then the third would be to reward or to incentivize ethical leadership. So to recognize such employees and leaders who demonstrate a strong commitment to compliance. So basically, these three, I would like to finish by stating that ensuring that you have a robust customer due diligence first will help you in preventing fraud and money laundering. Therefore, you are first, and in the first stage itself, trying to protect your institution. Next, you go one step ahead and become proactive in monitoring all of the regulatory updates which are coming from various regulators. Make sure that you are on top of it to ensure that your litigation risks in the future reduce. And then the most important and probably the most long-term goal would be to develop a culture of compliance itself, so that at every step of the way, every single employee understands their responsibility and they take accountability for themselves to ensure that these risks are mitigated. So basically, when you look at all of the best practices in the world, maybe when we adopt them to the Indian landscape, I think we can go forward in such a way that BFSIs minimize their risks. Are there any questions?
A couple of questions we have.
Yeah.
Very interesting dimension on this customer compliance due diligence or customer due diligence audits, or that focus. Though there is a KYC and all that, this focus is missing. As end users, we know, as end users, as consumers, and even the updated KYCs still are not updated in the systems, and it is not happening. Basically, we don't see that kind of an updation. It is not only in the BFSI, we are even seeing this in the telecommunications, the telecom also, because your customer data informations never get updated. That focus is actually missing. That B2C focus is not there. That's a very interesting one. But then we don't even see any dedicated efforts by the BFSI sector
Right.
to bring this kind of a consumer education or a consumer orientation program. See, as at the end of the day, as an end user customer, I don't care about all these regulations. I don't understand all these compliances. These are all your internal affairs. But
Right.
then I only look at my service standard or a service quality. A standard or a service quality can only happen if you really have those many such systems, practices, guidelines, and compliances in place.
Right.
So, as a customer, when increasing grievances repeatedly means things are not all right. That is what it is. So, whether it is a customer due diligence from a compliance perspective, from a standards care perspective, delivery perspective, all these things are actually missing. None of us experience that, whether it is a bank or an NBFC or whatever it is. So when the basic due diligence is not there, then comes your enhanced due diligence and surveillance, continuous monitoring. And we don't even see any surveillance mechanism also. As end users, we are not subject to any kind of that market surveillance. surveys or feedback mechanisms and things like that. That's a very interesting dimension.
No, I feel like that is why I said we need to look at the multitude of global practices which are already in place, right? There is significant cost that these banking and financial institutions have to undergo to ensure that they are in compliance with the regulations. But it again stands to their benefit if they adopt these practices. They are needed in place so that tomorrow when you look at the long term picture, that they're not violators, because the landscape is such, it constantly keeps changing, technology keeps changing. So it would actually benefit if they take this up and do it in an expedited manner, because it is the need of the hour. You see so many problems every day, in especially with regard to due diligence and all of that. I think it's very, very essential that they do it, that they take it up. And obviously also learning from the problems that the other jurisdictions are facing, it should really help, because India again is one of the biggest technology hubs too. It should be easy, it should be very easy to get people to do this, to bring out systems and tools which can help you with compliance. And also another thing that I feel is that the banking or the financial institutions, they want to do bare minimum, right? And that is why I said there needs to be a mandate also. There needs to be a mandatory recognition given by the regulator, saying that these things need to be done mandatorily, because otherwise at the end of the day they only want to do bare minimum. So I think it's very important that there is a mandatory angle also given to these tools, or to adopting these techniques that will help ultimately, which will help these institutions also be safe and reduce their risks.
Another point, what you've raised is very, very valid. And this is something which is the biggest gap in, apart from releasing one circular, one gazette notification, one order. None of the regulators are doing any knowledge dissemination sessions.
Right.
They're not holding any seminars, workshops. And as a regulator, you're asking the regulated entities to go digital, create technologies, and then automate the compliances. But why can't the regulators go digital, adopt the same technologies, create? Today technology is available. We don't find a hotline in any of the regulatory portals. We don't find a live chat options today. That is the technology. This is something you have to go on searching under an order, under a circular, under a master circular, and again, link to this, you click on this, you click on this. And I just wonder, as a country, we have technology. Why can't we make AI? Very recently, ICAI has launched a chat GPT for in finance and accounting. They have just announced last week 5,000 listed companies' annual reports are brought under this, and this is going to be used for a data analysis. This is the very first step, actually, where balance sheet analysis is made possible. So when a finance and accounting standards body can do a CA-GPT, they call it as a CA-GPT. Why can't we have a regulatory GPT in the country?
Of course, that is what I had stated, that bringing across all of these circulars and everything into one platform is also very essential.
Absolutely.
Because expecting the institutions themselves to always take up this initiative is also not done. It must be a two-way process. It must be a two-way process where the government is in fact leading, the regulators are in fact leading such discussion, bringing everything together in one portal. That would be the start. I would say that would be the start, to have a common single window platform.
Yes.
Where you can go about and get most of your answers answered in one place would be the start, which is possible and feasible today. It needs to be done, and it is the need of the hour.
There are portals being developed for single window, but how a
Effective.
kind of seamless and effective this windows or doors, honestly speaking, nobody know, because there are industry
And that will only
conversations.
happen when there is increased conversations between the regulators and the stakeholders.
Yes,
right?
regulated entities do not see that impact of this seamless conversation. Simple thing, we need a regulatory GPT. in the country. You know, you bring
Yes.
everything under that. When a CA-GPT is possible, why not a regulatory GPT?
Right.
And as customers, banks have not, as customers, we feel that, you know, service standards are not there. Banks have not really taken their industry standards like an ISO standards implementation.
Right.
Various standards are available to improve the customer focus, customer satisfaction, customer service. They're not taken, just certificates in the namesake, but
Again, that is
no,
what I want to highlight again, that mandatory, unless you make it mandatory, why
yes, voluntary basis.
voluntary compliance is always one step behind mandatory compliance, right? The effect will never be the same. So there is a duty on the regulators, there is a duty on the stakeholders, there is a duty on, so it is a collaborative effort from all of the parties involved. It cannot be one person alone bearing the burden of it. That is what I tried to state through my recommendations, that there are best practices being followed. Certain best practices favor the institutions, certain the governments. It stands in our best interest to take up all of these best practices from different jurisdictions and apply it to India.
Much of security breaches, cyber attacks, as community consumers, we don't have that assurance. Today, all of us are thinking, should we have a bank account or not? Do we
Right,
have to
right.
keep our funds
In
in the
fact,
bank account or
even
not?
before this meeting started, I saw the latest scam which has been exposed, which is WhatsApp wedding invite scam. So apparently you download a WhatsApp, so an unknown number sends you a wedding invite, and because it's a wedding invite, right, you open it, and there's an APK file which is quietly downloaded onto your device, and then the hackers or the scammers have a direct access. So the hackers or the scammers are coming up with very creative and inventive ways. Every single day they are working really, really hard to ensure that they do their job. How hard are our regulators, or how hard are we working to ensure that these things don't happen, or that we are ahead of the curve?
Very true, very true. Thank you. Very insightful, a different dimension and perspective. Thank you.
Thank you.
Suhasji, from your side.
Yeah, I have a couple of points. You
Yes, sir.
mentioned about the due diligence. Okay.
Yes.
Yeah. And along with the due diligence, there is also something called as a due care.
Right.
So from the legal point of view, how you differentiate? Because sometimes whether the due diligence is sufficient or you need to have also due care.
Sir, I just said that we need to also have enhanced due diligence. We already are very clear that due diligence alone is not sufficient. If it was, we wouldn't be having this discussion at all, for starters. And we know how the whole reason why there are other tools of due diligence also is because the basic due diligence, right, that we do is just for the basic everyday customer. But how do we ensure that your everyday customers and the high risk or the high the high risk customers are filtered out? You cannot have a one method. Look at it as a different step of filtration, sir. We need to have multiple filtration systems depending on what category or what risk that you are trying to secure, right? There are multiple layers to it. So I would definitely say that, sticking to just due diligence and not ensuring anything else, any other method would not be sufficient, especially in a country which is as vast as India, with different profiles and different actions and transactions being taken place. It is definitely not sufficient, especially when you are looking at cross-border transactions and all of that. Of course, there needs to be a couple of other steps also involved. I would say that it is definitely not the only answer. There should be different stages and steps.
And in case of the litigations on this compliance part, especially
Right.
on the data security breaches,
Right.
what is the relevance and the importance and the protection that good NDA will have? NDA with the staff, NDA with the supplier, because nowadays what we have seen in the industry, these NDAs are getting signed off just as case of a formality.
Right.
Neither the person who is getting that NDA is serious about it, or neither person who is signing that NDA is serious about it.
Right.
So in case of the actual litigation, whether this NDAs provide certain protection to the organization.
Right.
So that is what
So-
I would.
So obviously you are signing the document at the end of the day, right?
Yeah.
But what is the point? So the whole background with which the institutions are trying to get their employees to sign this NDA is so that they understand what data that they're trying to protect and what are their rights, their duties, their responsibilities. But again, nobody is taking the time to ensure that there is understanding of these. So the NDAs do protect you, but not to the extent where you can say I was ignorant or I did not ensure that my employees were aware of their duties, because you cannot take off. I don't think even the courts will agree with that stance if I say as a. So there is this concept called the master servant relationship in law, right? And that mandates that if you are hiring somebody, that you ensure that any act that they have done would be considered to be an act done by you. So I cannot try to offboard my duty saying that they have signed an NDA but they have breached. I don't think the courts would also take that stand, because it is your duty to ensure that is why I tried to say that there needs to be, we need to have compliance as a whole mindset also. Because if you do it from a perspective of this is what is mandatorily required, I will have the NDA signed, but that is all I'm going to do, tomorrow that NDA is going to be of no help to you if you are going to plead saying I did not do my duty to ensure that my employee read it, or I
That's
did
what
not.
exactly happening.
Right.
Because employees are not aware that what they need to do to abide to that NDA.
Right, and it could for simple be as, you know, when you are reading the terms and conditions, right? Like when you are for instance on an Apple device, you cannot simply click and accept immediately. You are supposed to scroll down a few pages at least before you can click I agree to the terms and conditions. Similarly, you know, just even small measures, I understand the scale that certain businesses do, certain institutions do business at, so it is not possible to offer straight face-to-face training, but there can be effort made to ensure that they mandatorily watch maybe a video to understand what the basis is of the NDAs that they are signing, to at least understand the risks or the amount of loss that they would cause, especially in terms like data breaches and all of that. There should be, I will say that these NDAs will serve the institutions of no purpose if they don't do the work of actually ensuring that people understand what they are signing, what is the data that they're looking to protect, and how it protects not only them but also their employees as stakeholders. Everybody needs to understand it, and it cannot simply be a formality. That is what I was trying to say. We need to build this culture where these things are actually given their due. When we say an NDA, that it is a document that is trying to protect somebody's rights. So it is very important that all of the parties, even the party who is presenting the NDA, even the party who is signing it, they all understand what the expectations of both parties are. And it is, unfortunately for the institutions, because they are the bigger people, it is the duty or the burden lies on them to ensure that they do the needful, and that is not bare minimum.
Thank you. Thank you.
Thank you, sir.
So, audience, any questions? Because I don't see any questions in Q&A.
Yeah.
So, thank
We
you
can
for your insightful and quite practical case scenario basis
Thank you, sir.
topic discussion. Thanks all. Over to Rama ma'am.
Yeah, thank you. Thank you so much, Suhasji, for hosting the session. We had a good, insightful session on the evolution of global capability centers in the country and how the sector is undergoing a lot of dramatic changes. And it was a good, insightful conversation by Mr. A.K. Subramaniam, and followed by the industry standards and regulatory compliances that need to be followed by BFSI sector, and the challenges from a legal perspective due to non-compliances was beautifully elaborated by Vedavel, and bringing the consumer based focus, with a focus on consumers, uh, be it the know your customers norms, to do a proper due diligence, and to make this as a culture, the compliance as a culture in a BFSI domain, not only in this BFSI sector, this has to be the scenario in all other sectors also. Vedawell also has mentioned. The BFSI sector is extremely regulated, and with so much of compliances and regulations, sometimes we do wonder, are they really losing sight of that, the real customers and their service, their care, whatever we call it as, are they really getting what they deserve? When the end users, customers are getting serious doubts about banking uh, as a kind of a practice itself. That's a big doubt all of us are getting, looking at the kind of phishing attacks, cybersecurity threats that the country is witnessing. And many things are global, not just in India, but too many attacks. So that assurance to a common man is missing in spite of so many regulations, so many compliances, the digital transformation that we are talking about as a country. So the time to accelerate and fast track, we cannot say that we can go slow at a slow and steady pace, because the tolerance from the public is also coming down, because the attacks are increasingly too many. So that customer due diligence, we really don't know. And they were talking about high risk customers, high risk customers. I was just wondering, where is it listed? What is the classification of the risk? Where is it there in the public domain? They may have an internal categorization of high risk, low risk. Who's considered as a high risk, and they may have their own criteria, but certain technical regulations, non-financial structures, you see, they list, these are all the products which comes under low risk, high risk. Maybe some kind of a classification is also needed. These are all the cases that they consider as high risk, low risk and all. Then try to create some kind of a customer oversight due diligence, which will also help give that assurance to the customers that, banks do follow. Most often we do not know why they ask so many questions. What is the reason also? We do not know. So it was a insightful conversation, a meaningful conversation. This is one sector which has got a strong connect with the community, society, and a common man. We don't find any conversations from BFSI regulators to the consumers also. Very rarely we come across some conversations. And industry also is highly regulated. So regulated entities also are facing the heat of increased compliances. And there is a global call of action given that the businesses should focus more on performance, have to, from compliance to performance should be the focus. And that is the global call of action also, which is given in all these scenarios and situations. Having conversations like this will help both regulators and regulated entities and end users. Each one of us is a banking customer or a customer of some financial institution or some insurance company, will help us to understand the challenges. We never know what kind of challenges the other side have. The other side do not know what is it that we are looking from them as customers. So conversations like this will help. These conversations are created as part of our a series to cover multiple sectors where there is a lot of strong direct to consumer or a B2C focus. So BFSI being one such segment. It was a meaningful conversation. And with this session, I just wanted to highlight once again that we have come to the session, the series, November month quality series session closure. This is the last session in the series. We have completed 16 sessions with a lot of conversations related to standards, certifications, and regulations across various sectors. So all the session recordings will be uploaded or already uploaded and uploaded on being on a daily basis in our portal. So we request all of you to visit our portal and keep visiting our sessions. We will share an update. All the sessions, key highlights from each speaker will be compiled as a newsletter, a news bulletin. It may take us a 2 to 3 weeks time. Lot of compilation is needed with key takeaways from each speakers. Give us about 3 to 4 weeks time. We will be circulating this to all of you. All these conversations would not have been possible but for the tiring efforts of various stakeholders. all the session hosts who are anchoring sessions like this, they had to do a lot of homework. And there is a backend team which was working tirelessly from the CCC Secretariat. And there are so many other volunteers who have also come forward to contribute in their own way to make this happen. This was an enormous exercise, but knowledge dissemination is our focus. It is our interest. You all know that CCC, we don't do any commercial programs. Our interest is only knowledge dissemination on the latest updates related to standard certifications and regulations. When we talk about regulations and compliances, the involvement of the financial systems and the legal systems teams is also very critical when we are talking about non-financial structures. So that is one of the reasons why you find interdisciplinary or a multidisciplinary teams also being part of this conversations. So we thank you once again for joining us. Keep visiting our website, Consultants Consortium of Chennai's website regularly for all the updates, session updates, and various other announcements from the industry. Last but not the least, we would like to thank our mentor, our guide, Mr. Anil Javri, the former CEO of National Accreditation Board. Without his support and the hand-holding, I don't think it would have been possible for us to kind of create this kind of conversations, even when he was attending COP sessions in the global market and recently held a COP series. Still, we have reached out to him on many occasions seeking his help and support. He's always our guide and mentor, and the CCC is able to come to this level, or even the Management System Consultants Consortium. It is because of the support and guidance he has extended that we are able to do all these conversations. So we would like to invite you all to attend our sessions regularly. So thank you so much. Thank you for joining us. So with this, we will wind up the session. Thank you. Thank you, Suhasji.
Thank you, ma'am, and thank you all.